Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well on this fine Friday, weekend, or weekday, whenever it is that you're watching. And if you're new here, every single Friday I break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. In today's episode, we have updates from the Cardano Virtual Summit, we have some Bitcoin news, a bunch of stuff about blockchain gaming to talk about, some Chainlink, and of course, our usual 404 Logic Not Found segment. But before we get into all of that stuff, let's kick it off with questions from the community on YouTube and Twitter. So I'll pull those up now here on the computer, but if you want one of your questions answered, make sure you leave them in the comments down below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel and hit that bell notification button so you can get a heads up whenever I post new content here on the channel. And the first question of the day today is Crypto0634. And the question is, do you think that the current DeFi craze is akin to the ICO craze or bubble of 2017? And if so, are DeFi projects worth investing in at this time? This is a fantastic question. Now, I think that in many ways, there are parallels because DeFi is so hyped these days, and a lot of the coins that are associated with DeFi, in my opinion, don't make a lot of sense in terms of what they're valued at. I think Compound is a great example of this. Compound went up to crazy prices. It was up several 100%, I think. And then all of a sudden it goes back down and it gets chopped in half. And I think that this is a result of the same human reaction to ICOs that we saw in 2017. People find something that they think will make them a lot of money. They evangelize it, they shill it, they push it, they overextend, and then the rug gets pulled out and the valuation kind of falls back down to earth. And so in that regard, I think it's similar to ICOs, but I think DeFi comes at it from a much more honest place. Whereas ICOs were selling basically a product they didn't yet have and that they were thinking about doing. And in many ways, a lot of them were securities, and you're seeing that now. I think when it comes to DeFi, a lot of these products are overhyped for sure, but they actually have something to show for what they're offering. And so I think that part makes DeFi worthy of investing in at large, but I think you should just be careful about how much risk you're willing to take and not to overextend. So that's a great question. Thank you for asking that. The second question is from Pedro Martinez on Twitter. Why do you think Bitcoin is tethered to the US stock market? It looks to me that it's been that way since the crash. Another great question. And I think a lot of people believe that the Bitcoin price in general is sort of uncorrelated or untethered to the stock market. But in many ways, it's the human reaction to panic in the world economy and panic in the markets that drives them out of not just gold and stocks and in many ways, even bond markets. The same thing happens to Bitcoin. When people are panicking, they take their money out of speculative investments and pull it to cash because they're fearful. And we're going to talk about this more later in the video, but I have a feeling that the longer that this whole situation goes on where people are losing jobs, etc., the more likely it is that people are going to pull out of the markets, and that includes the stock market and Bitcoin and gold, etc., even though Bitcoin is theoretically an answer to the central banking problem that we have in this world today. In terms of hyperinflation, so on and so forth, and you see the effects of that happening in places like Venezuela. But the reality is, even though it makes sense why people would move to Bitcoin, it doesn't always work that way because people are people and they don't always think about things logically especially when panic is happening. So I think it's tethered just because of human nature. And I know that's not a perfect answer, but in reality, I think that's majorly why, and because Bitcoin is not yet fully understood. Thank you for your question. Tony De Benedictus asks, any thoughts on Lisk? Yeah, Lisk is a project actually that I'm quite fond of. I think that they have a lot of the fundamentals down and they've been around for a while. Now, here's one of the things that I respect about Lisk is that they've built a platform that's very much out there to innovate on, I guess in many ways, similar to how Ethereum approached a lot of the problems with decentralized network on which you can build applications, you can facilitate transfers of digital assets, that being said. But I think Lisk has done a great job of taking the hype away from the equation, right? There's not been hype marketing. There's not been a lot of marketing in general done by Lisk. All the attention they've gotten in large part has been just by building cool things and by showing up to conferences and talking to people. And that's what struck me the most is that I was at Consensus, I think 3 years ago, And I've been every year except for obviously this year because there was no consensus this year. And the Lisk team is always great. They'll sit and talk to you about what they're working on for hours if you want. They'll teach you, they'll work with you, they'll help you get hands-on with stuff, and I really respect that. So I'm hopeful that Lisk continues to get the attention that they deserve. I've not kept up with their latest developments just because of time constraint. I can't keep up with everything, but I do think that I am due to check it out some more again and learn more about it, and I will include that in a video probably. So thank you for your question, Tony. The next question is from Andre Bator. I hope I got your name correct. What is China's BSN compared to NEO? Two completely different things. NEO is, I guess, a semi-privately owned project, and it's being built very much as a competitor to Ethereum, if you think about it that way. It's a DApp platform, it's a decentralized network. Whereas the BSN is really like an interoperability layer or a hub where multiple public chains are integrated or accessible on this layer. So the BSN basically gives enterprises and governments and organizations in China the ability to get data from and interface with multiple public chains. And so I have a feeling NEO will likely be a part of the BSN, but not vice versa, if that makes sense. So the BSN is very much an interoperability project, if you want to think about it that way, whereas NEO is sort of an individual project. So thank you for your question. Damon Hare NYC asks, what do you think of Ethereum Classic Coffee Made? Yeah, thanks for drinking coffee along with me if you do on the channel. Ethereum Classic, I think, is one I have respect for in the first right because they did exactly what the decentralized world would have wanted them to do, right? They showed that a blockchain network is not governed by a figurehead per se. And they said, we don't agree with the way that the DAO hack is being handled and we don't want to roll back. We're going to let it happen and we're going to have our own chain. And so from that perspective, I think the ethos of Ethereum Classic is very true to the decentralized vision, which I respect. I do think that with the 51% attack and then some of the developer funding struggles that they've had a really rough go of it. And I feel bad for that. But I think what they really need to do is just find their niche. Is that going to be sort of like what Bitcoin Cash is trying to do and just to be a quick payment network? No frills, no fuss, nothing extra. And they're just going to optimize for speed. That could be their niche. Or they say, we're going to take a different approach to smart contracts. We're going to build a new VM. We're going to build out a new language, etc. They could do that. I think they really just need to get the developer funding oriented towards one goal and pick one goal to move forward. And they have the chance to be relatively successful. I mean, they still have exchange listings and that stuff really does count. So there's nothing stopping them from doing well. So they have my respect for sure. Borkmeister would love to hear the basics and would love to know your suggestions on security software for your laptop and desktop. He said, thanks, this is my morning news channel. Thank you for watching, especially for watching as your morning news. I really appreciate that. So ironically enough, these days, security-wise, software-wise for your mobile devices, your laptops and desktops, etc., I actually don't think you need anything more than two things. One, the default security setup you have on your computer, and two, good common sense. Because I think there is no antivirus that is perfect and infallible. And quite frankly, if you have a Windows machine, Windows Defender is plenty. Spending extra money on another antivirus is not really going to help you. It's diminishing returns. And so if you have Windows, stick with Windows Defender and just be smart. Don't go to sketchy websites. Don't download files that can't be scanned unless you're sure of the origins. Don't run mysterious software. Basic things like that. And then for Mac as well, common sense is key. Mac does a pretty good job, and the core OS does a pretty good job of protecting you. Nothing is perfect. You can get viruses, but the key is just to follow best practices. The only thing that I've used on either Mac or Windows beyond what is coming standard on these devices is Malwarebytes. I do think Malwarebytes is pretty quality. And it's good. My only issue is that it doesn't play nicely with every single piece of software out there. And so sometimes it's more of a pain than it is a benefit going, into downloading software and working with software. It just becomes a pain in the butt sometimes. So take that for what it is. And thank you for your question. Coasurvate Droplet. I have a pile of ADA in my Exodus wallet. What do I need to do to accommodate the change to Shelly? The short answer is you don't have to do anything. Shelly and moving into staking and incentives. You don't have to do anything to prepare for it really, but there will be tutorial content and plenty of stuff happening on this channel and plenty of other channels in terms of how to stake that ADA when that happens. And I'm sure Exodus and a bunch of the other wallets out there are going to tell you whether or not they're going to support staking natively or how to do it if not. So just keep your eyes peeled for that when it is time for that to go live. That should be end of July. All right, last question for the day. Yael Martinez, great videos as always. Thank you so much. The question is, what will happen to POW coins like Bitcoin once quantum computing gets better and cheaper? These computers will break present cryptography and have enough power to change blocks. I'm no expert, but I've read this might happen in the future, not necessarily in the near future. Yes, so what are your thoughts? My thoughts are this. The real threat for quantum computing is the fact that it can perform prime factorization extremely quickly. Prime factorization is really what builds the security of public key cryptography, which allows you to derive a public key from a private key and vice versa, and being able to encrypt data using a public key that can only be decrypted by a private key. Ultimately, what this means is that you're allowed to share your public key and keep your private key secret such that someone can encrypt data with your public key and then you can decrypt it with your private key. As long as no one is privy to your private key, it's completely secret. The reality, though, is that with quantum computing, theoretically, it makes it possible that with a public key, someone could derive your private key going backwards. And that means that private keys are no longer secure or safe. This would mean that someone could spend your funds given your public key. That is the number one threat. The second threat is that quantum computing could theoretically make it cost feasible to go and reverse blocks or change blocks. The reality, though, is that by the time I think quantum computing gets to the point where it can do that, there will be enough people that have them. And as long as the hash power continues to grow on the network, it will still be very difficult to do it. What will not change is that quantum computing is not necessarily going to be able to, especially in the short term, break symmetric style cryptography, or rather, it won't be able to break trapdoor functions like hashing, right? So a hash, given a hash, it can't go backwards and extract the raw data, because really the only way to do that is via brute force attacks, which aren't necessarily something that quantum is focused on doing. Not saying it's impossible, but it's less likely. So the real risk is prime factorization being broken as a security model for public key cryptography. And I think what needs to happen is we need to be thinking now about how to move Bitcoin and basically every other protocol, including other applications that aren't blockchain, away from these breakable keys to something else. There are a bunch of things that we could do, hash-based signatures. We could increase the key size to the point where it would still be difficult. We will find a solution, but we just have to take it seriously now instead of waiting for it to be a problem. So I wouldn't panic too much about this. It is something we need to think about, but it isn't the end of the world as long as we start coming up with solutions. So thanks so much for those questions, and let's dive into the news. Now, the first thing I wanted to mention today is that the folks over at Ledger announced a really awesome promotion for their flagship Ledger Nano X hardware wallet, which I have reviewed on the channel quite often and I use quite often. And this is a great opportunity to get a wallet if you don't already have one. Ledger is holding a competition called Coin League, where each purchaser of a Ledger Nano X wallet can vote for their favorite of 79 different cryptocurrencies to pick a winner. Now, in mid-July, there will be a winner announcement, and I put a link down in the description below for anyone who's interested. But basically how this works is that you'll use a coupon code at checkout, and that coupon code is composed of Coin League, then a dash, and then the crypto name of your choice. So for example, if you want to vote for Bitcoin, you would do Coin League with a capital C, dash, Bitcoin with a capital B. And when you enter that promo code at checkout, your vote will be counted and you get 20% off of your purchase of a Nano X. Again, there's no pressure here for you to buy one if you don't need one, but it's a great opportunity to get a discount if you don't yet have a hardware wallet. Now, for those of you who are Cardano fans, it is a really exciting time because the Cardano Virtual Summit is happening right now, and that's to discuss not only the Shelly staking and incentives hard fork that's coming at the end of the month, but also for several other big announcements as well. Now, the first massive item here that we need to talk about, of course, is on July 1st, the node deployment for Cardano's code contained the source code for Shelly, meaning everything is pretty much locked and loaded for Shelly to hit mainnet as of now. Of course, there will be bug fixes and probably further deployments to follow before the final hard fork happens at the end of July, but the core framework is now there for this awesome update. And this is huge news. People have waited so long for this, and I'm very excited that it's here. And to me, the second most impactful announcement was the Atala Prism identity system that was described by Charles Hoskinson as a means by which millions of unbanked can access and take advantage of the services available on the blockchain. An interesting little tidbit here, though, is I think that Atala, the name used for this service, is in reference to the Transcendent book by the same name, authored by a French writer, Chateaubriand. And that book is one of my favorites. I read it in school a long time ago. Now, there's a lot we don't know about the composition of this identity platform built on Cardano and how it's going to work, but nonetheless, I'm very excited about it from the core perspective that digital identity is huge, and I think digital identity will be a massive cornerstone in the future of this tech in the space at large. And next on the list of announcements was Project Catalyst, which is actually another name for the major on-chain governance updates dubbed Voltaire in the original Cardano roadmap. And if you want to get a full rundown on the Cardano roadmap items, I did do a video on that, which I will link up here in the card somewhere or down in the description below if you're interested in watching that. Now, the Cardano team announced that Voltaire, the framework that will allow ADA holders to directly influence the future of the protocol by way of on-chain governance, will be released before the end of 2020. Now, this date is vague, and I'm actually glad that it's vague because it gives them basically until the final hour of December 31st to push this code to meet that deadline. But I really wouldn't be surprised if it gets pushed till 2021. Essentially, Voltaire, dubbed Project Catalyst in this case, establishes a treasury system within the Cardano ecosystem to let ADA holders vote for protocol update funding, developer funding, and other project funding directly. It basically puts the governance of the blockchain protocol itself into the hands of ADA holders in a sort of digital democracy. Now, this is critical to the vision of decentralized governance on the network, and I was actually surprised that they committed to a 2020 deadline for this, but I'm pleasantly surprised. I'm glad that they're pushing this forward. And the other two announcements were not necessarily as impactful, but still quite interesting, so we'll talk about those here. One is dubbed Atlas, which is essentially a project focused on releasing quality of life tools for network participants and ADA holders. Think things like a health dashboard UI for ADA holders to check the health and the metrics of the Cardano chain, tools to view and analyze stake pools and the distribution of the network, and I assume some tooling to make pools easier to set up for everyone, including developer tools in that regard. So this is great to hear because we always want quality of life things for users. And finally, C-Fund was announced, which is a partnership with Wave Financial Group to establish a $20 million fund for startups that will utilize and build with IOHK's blockchain technologies, which are obviously largely predicated on Cardano. And this is something we've talked about maybe last week or the week before when one of you asked me what roadblocks and what Cardano must do to get to adoption. And the biggest one is getting products that people use built on it, and setting up a big dev fund and startup fund here is the best move they could have possibly made in that regard. So what I want to see from here is a concerted effort to get Goguen released so they have smart contracts along with tools to make developers' lives easier, much like Truffle does for Solidity on Ethereum. And of course, all of this is only encapsulating day one of the summit, and so we'll see what day two brings us. At the time of this recording, day two of the summit is still going on as we speak, so I didn't want to wait till it was over to make this video. But I'm very excited to see all the promise and potential coming to fruition for this project, and I want to tip my hat to all of you who have always supported the project through thick and thin, especially lately with all the stuff just finally coming. I'm sure the entire Cardano team shares my feeling of gratitude for your support. So stay tuned for an update on day two of the Cardano Virtual Summit here on the channel, which will be coming shortly. Now, in the world of Bitcoin, more specifically Bitcoin price, we've seen mostly sideways trading this week, and of course some reasonable drops even below the 9K mark, US dollar mark rather. And interestingly enough, we've seen more and more that Bitcoin has been more closely correlated with the stock market movement than we originally thought. And I think this is derivative of the fact that casual Bitcoin holders are likely to move to cash when panic starts. And when markets are red especially, I think people do this. I also think that as we've moved further and further and further into this quarantine, more and more and more people are being forced to liquidate their investments just to simply survive. Lots of people have lost their jobs here. And there may be much more at play than just these things, but these are my first thoughts as to why we can't break that 10K mark. Overall, I don't see this as a bear signal for Bitcoin long term, but I do believe that regardless of the underlying theme of Bitcoin versus the central bank monetary policy being so clear, human beings just don't flock to Bitcoin in mass, especially during economic turmoil. It's human nature to avoid what you don't understand. And we as a community who do support and understand Bitcoin, we can't bank on, pun intended, millions of individuals who know next to nothing about Bitcoin to siphon their hard-earned cash into it all at once during a financial crisis. Our best possible scenario is that institutional investors, and a select subset of them who understand the core value prop of Bitcoin, start to invest and also evangelize in Bitcoin. And that will be what helps move the needle, in my opinion, in a positive direction. The problem with retail investors in many ways is that they're in the game for short-term profit. And because Bitcoin is quite volatile, it will invariably drop hard and fast and often. And these types of moves are often amplified when you have a large number of short-term profit seekers who will liquidate to cash at the first sign of trouble. That right there is the risk. And of course, these are just my opinions and you're free to disagree. In fact, please do share your thoughts in the comments section below if you disagree with what I'm saying. Now, one interesting news article I did read about Bitcoin that is relatively positive is that the Blockchain Explorer, and that is a tongue twister alliteration there, has now released a privacy-o-meter to give each Bitcoin transaction a privacy score that evaluates the ease with which a transaction can be traced to its origin. Of course, because Bitcoin is a UTXO or unspent transaction output based blockchain, each transaction that doesn't spend an entire output must send change back to the sender within a transaction. Often in poorly optimized transactions, though, the sender's address matches the one receiving one of the outputs, making it easy to see who the sender is and subsequently where the change is going, so you now know this is the same person receiving this output. Now, this tool will be quite useful in helping everyday users optimize their transactions to include some modicum of privacy without compromising good user experience. And it'll also help keep wallets honest if they're not following best practices. So this is pretty cool in my book. But alas, it is time, ladies and gentlemen, for 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this video right here get some attention from the YouTube algorithm gods, please do hit that like button on my behalf below. It really does help the channel, and I do thank you for that in advance. You know what I like? Free market economy. You know what I don't like? Free market economies that support too big to fail businesses. Now, early on in this whole mess that we're in right now in the world, Boeing, the major aircraft manufacturer, went to the government looking for $60 billion to save their embattled business. After pushing out an unsafe airplane in the Boeing 737 MAX that resulted in over 300 casualties, and then a plethora of financial folly to follow, Boeing did not really deserve 1 cent to save their business, in my humble opinion. And it could in fact be argued that they deserved to fold altogether. However, instead of simply giving them the $60 billion they asked for, the government instead let them sell $25 billion worth of bonds with no strings attached. And to say this is a massive let-off for the company is an understatement, because now they're not bound by any stipulations that would have surely come with federal relief funding. Now, news has broken recently that test flights have begun again for the 737 MAX plane, and they're in the process of recertifying with the FAA. Realistically, not only has Boeing gotten away with rushing production of a poorly designed plane that cost human lives because of poor software and poor design decisions, they've also been enabled to save their business with little to no strings attached and to bring this plane back to market now pretty much unabated. And it makes me sick that a company can put profit before safety very clearly, then fall into financial distress, and then get a free pass. Sometimes you just have to let the giants fall, and sometimes you just have to let someone that's done the wrong thing fall. 404 Logic Not Found. Now, in the world of blockchain gaming, there is some huge news coming out of one of the biggest gaming outlets out there. The Phantasma blockchain project, which I've been more and more excited about lately, and a big shout out to folks in the comments who've put it on my radar. Phantasma announced that it created a new front-end interface for users of popular gaming platform Steam that would enable a plethora of blockchain features for the platform's players. Now, this new platform is called Pavilion, and it essentially allows Steam users to link their gaming account to play games with additional features like NFT collectibles, in-game currencies, and achievements powered by the Phantasma blockchain. It also allows Steam game developers to quickly and easily integrate NFT features into their games without specialized knowledge. I think this is a huge development and a fantastic idea. The easier it is to garner adoption for in-game items using tokenized assets, the faster you can build a resale market that drives usage and understanding of blockchain outside of the traditional communities who talk about it. And this could very well be one of the major platforms in the blockchain gaming world because it's taking a popular service like Steam that has a ton of users and brings blockchain into it natively as a feature enhancement rather than trying to re-architect the entire thing. So well done to the Phantasma team. And we were talking about Cardano earlier, but there was a bit of news that I forgot to talk about. The business arm Emergo for Cardano recently announced that they're partnering with Travala.com, the blockchain-based travel booking site. And as a result of this partnership, Travala will now accept the ADA cryptocurrency and will reward users with 10% cash back on purchases to fly or to book a hotel when you use ADA. And this is certainly something that I will use, hopefully once we can travel and stay somewhere again, but fantastic news there. And Chainlink-wise, for you Chainlink fans, it was recently announced that the Singapore-based crypto exchange Huobi is the first major exchange to run their own Chainlink node, meaning they are actually not just supplying data, but running a node to supply the data. Huobi will use this node to provide trusted price data or price feeds to DeFi applications and ensure that these price feeds from its platform are provided on-chain securely, efficiently, and with high integrity. Of course, Binance already provides data to Chainlink nodes as a data price feed provider, but Huobi is the first to run an actual Chainlink node themselves to really own the process of providing that data in real time to on-chain contracts. This will be interesting to see which exchanges start to follow suit and how the presence of exchanges influence the decisions made in staking and governance when Chainlink nodes start to support that stuff and all the staking and incentives and governance stuff gets pushed to production for the Chainlink network. So stay tuned for that. I'm very curious. Of course, if you want to keep the party going, please do check out this video linked here on the screen, all about Chainlink, explaining what it is, how it works, and everything you need to know about it. Thank you so much in advance for watching, and I wish you and your family a fantastic weekend. Happy 4th of July if you're celebrating, and until next time, cheers.